Welcome to our daily Bitcoin update, where we share our market perspectives, trading, and volatility strategies. We are a small team of investment professionals with decades of experience in traditional finance. Our careers span roles as traders, market makers, and portfolio managers for top-tier institutions. As proprietary traders of digital assets, we have developed a proprietary methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs from traditional finance and technical analysis. Our methodology translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price-volume relationships. Please note, our content is not investment advice or is this an educational channel. It is intended for entertainment purposes only. Our content is clickbait-free with no affiliations to exchanges or paid sponsors. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. BTC's recent ascent is showing signs of exhaustion, with absorption of new longs and declining volume on the follow from the 68.3K weekly high. Price action since the rejection overnight going into the London session is thus far corrective and not impulsive. BTC is currently consolidating above key local support at 67.2K. To the downside, the next key level likely to provide support is 65.5K, which we view as an invalidation level to local bullish market structure. Thus, as long as price holds this level, we see probabilities favoring continuation to the upside. In this bullish scenario, we target 69.7K as the next reaction zone, which, given the close proximity to the largest concentration of liquidations residing between 70K-72Ka, increases the probability of participation from market makers to drive price to this zone. The market backdrop remains supportive with positive sentiment as indicated by crypto greed and fear index remaining in greed, constructive price action in correlated risk assets, and volatility markets' recent excess demand for calls versus puts. BTC ETF flows have also been significantly net positive for the prior 4 consecutive sessions. Looking forward, today there is the monetary policy decision from the ECB, and shortly thereafter, eco data in the US, which have potential to introduce market volatility early in the New York session. Going into the weekend, there are no significant foreseeable catalysts, however heightened geopolitical risks persist. Additionally, the rapidly approaching US election also remains in focus, with investment implications of a Trump victory being more supportive for risk assets, the probability of which has recently been rising according to polls and betting markets. In terms of strategy, despite corrective price action, we maintain a marginal long bias with a swing trade orientation. Our local target to the downside, to which we see higher probability, higher R-factor long setup, is 65.8K. As mentioned, our invalidation at a local bullish market structure is 65.5K. Thus, if this level does not hold, we see probability of a deeper correction increasing to as low as 61.5K, where the highest concentration of liquidity to the downside currently resides. Long-term bullish market structure remains intact and invalidation levels are not within close proximity. Thus, we prefer to look for long setups at aforementioned key reaction zones to the downside rather than implement tactical low-risk reward shorts. As always, do your own research and analysis. Be safe, and good luck in trading.